Hello, everyone. Welcome back to the rationalinvestor.com's. What is this? This is our broiler chicken show, the weekend show. Bark, 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 bark. I don't know whether you guys have noticed, but the past few weeks we've tried to do this as a Zoom call so that you can all see me on camera. I'm still a little camera shy about doing it this way. And actually, I've got a bum shoulder right now that I've been icing down. So you're probably looking at me going, hey, Brian's a hunchback of Vancouver Dame or something. Canada Dumb. Anyway, so I've been icing my shoulder down religiously, trying to get it into shape. God, I don't know. I guess maybe once you cross that magic 50 threshold, man, stuff starts to fall apart. So the boys wanted me on camera, so here I am on camera. I probably look kind of goofy, but if you're wondering what the hell the lump is on my shoulder, it's a big bag of ice. And then if halfway through I go, ah! It's because the water just poured out of the bag. It's pouring down my body. So FYI on that. Probably a weird start to this video, and I don't even know if anybody's even watching this or not. I hope you guys are enjoying this market, and it's a bit of a slog, there's no doubt about it. We are watching, hello, SP 500 Steph. All right, that's cool. Hello, Steph. Is that Steph or Steve? Steven? I don't know. But it looks like there's a couple of people over there on YouTube, so that's kind of cool. Hey, you get a bit of a private show here. If you join live, there's not that many people that watch. So if anything, if you have questions and stuff, Stephanie. Oh, interesting. Oh, isn't that interesting? That's a female. Well, good for you. In fact, my sister's name is Stephanie. So that would be ironic if that was you, if that was actually my sister watching all this time. That would be freaky. Anyway, welcome, Stephanie, and I hope you're enjoying the content. It was suggested school term is out right now, and FYI, every term we do a raffle. So we give away a seat to the level 1 program. And honestly, I think the person who won the raffle last term, they never bothered to show up, which was kind of weird. Obviously life happens. I mean, hell, maybe they were caught in the middle of a battlefield in Eastern Europe or something. But one thing that our marketing guy said, and I kind of like the idea, is I think I would like to do a raffle this term. I like to do it every term, and I think it's good karma. And hopefully, some of the raffle winners have actually, what our very first raffle winner is still on the site. And every Tuesday, he sort of quarterbacks our secret options formula club meeting. And he's a fantastic investor. I mean, he could easily get a job on Wall Street as a hedge fund manager, no problem whatsoever if he wanted it. So it just goes to show, there's karma for you. And I think he's the type of guy is super appreciative of the opportunity God handed him. And man, he ran with the ball. So proud of David. So, winning this raffle might just change your life. And actually, I even had the privilege to talk with another gentleman today who specifically said that, Brian, you literally changed my life. So it's a great honor. I sure hope I'm living up to your guys' expectations. And it kind of sucks, right? Because, the stock market and the crypto market and risk markets and all that kind of stuff. You guys want to come and make money all the time, but it doesn't work that way, right? You go through bull cycles and everybody's making money. But once that inertia is done, then the whole damn market has to go through the process of crashing. And all the people, of course, that chased and came late to the party, they end up being heartbroken. And, they end up cursing people like me. But if it's one thing that I made a promise last cycle, 2018, I told everybody on the site that my promise was that I would be here week in, week out, bull market, bear market, shitty market, good market. I'm here. This is my life. In fact, what's interesting is I still use this coffee cup. I don't know whether you can see it or not. The writing is gone. It's completely gone from the coffee cup, but this used to be my old broker mug. This used to actually have all my firm's write up on it, Union Securities, and I still use the same damn coffee cup. I got some other coffee cups. You want to see a really cool coffee cup? Our marketing guy, I don't know whether you can see that or not. Our marketing guy, Josh, he actually put like all of our course material right on a coffee cup, but I don't want to use this damn thing because I don't want the writing to disappear. It's so beautiful. And you can get one of these in our tchotchke, our merchandise shop. This is next level. I mean, look at that. I mean, it's hard to see this funny zoom camera, but just look at all that. I mean, it's literally our whole damn course on introduction to TA right on your coffee cup. But I don't want to use it because I don't want the damn writing to disappear. It's so fucking awesome. Anyway, that's Josh for you. He's so cool. Anyway, so I mean, it's a tough market right now. I'm not going to sugarcoat it. I'm not going to sugarcoat it at all. And the problem here is that this is intentional. Like the 1% want our lives to be very uncomfortable right now. You even heard it on Friday. Mr. Powell explicitly said that his intent is to make your life shittier, which kind of sucks. Sometimes I wonder whether it's just benign neglect. Sometimes I wonder whether it's actually a nefarious plot specifically put in place. Sometimes I wonder whether it's just outright stupidity. But I have to say, these central planners, they're just not very good at this job. And I even heard somebody. I was watching a broadcast over the weekend. And somebody I heard a gentleman specifically say that he believed that this job of monetary policy was actually beyond the human's capability of actually doing correctly. That the system is just so complex. And what I've found, and this is often what happens, I've seen this my entire career, is that these central planners at the very top of the pyramid, they always act way too late, they always act way too much, and they always act and take it way too far. Always. You can almost depend on it. And there's one gentleman that I highly respect in the marketplace, Stanley Druckenmiller, and he basically just makes a career out of just watching what these central planners do and then building his portfolio around taking advantage of their idiocy. So, I think a really good example was in like 2020 there, the economy was booming. And you remember in late 2019, Donald Trump was begging for the Fed to lower interest rates. Then the health crisis comes along and the Fed's like, well, this is a pretty strong economy. I don't think, we should probably just, keep everything neutral. Let's not rock the boat. Then the sickness came along and they just like instantly took interest rates to zero. Now, what the hell do you think is going to happen? The economy, 3 or 4 months prior to that, they were like, there's no fucking way we're lowering interest rates. So that'll cause inflation and all hell will break loose. This is a very strong economy. So then all of a sudden you go, all right, we're going to shut everything down, but we're going to take the cost of money down to zero. So what ends up happening? Everybody goes and borrows a shitload of money and we get this massive inflationary push. And usually these inflationary pushes are started with the biggest assets, right? If you just the simple analogy, do you think a whole bunch of kids in going to the local confectionery and buying up all the bubble gum supplies, you think that's really going to cause an inflationary spike? No. Why? Well, because if bubblegum goes from 50 cents to $1 or $1 to $2 or whatever, you can buy all the bubblegum you want. It's not going to make a hill of beans a difference. But you do that policy on the scale of something like houses that are going from 100,000 to 200,000 or 200,000 to 400,000 or 400,000 to 800,000, and you do it right across the board. And what ended up happening, I mean, these fucking idiots, what ended up happening is companies actually started going, hey, you know what? Look at the house. Let's go borrow $1 billion and let's go corner the housing market. So, I mean, that, and, a guy named Larry Kudlow, who you've probably heard of, he was kind of a right-wing leaning economist on CNBC for quite a bit. And he was part of the Trump team. He would always say that inflation is nothing more than the velocity of money. So you get a lot more money sloshing around the system, i.e., we're not really buying bubble gum. We're not buying candy bars. We're not buying jeans. We're not buying sneakers. We're buying houses that are in hundreds of thousands. And then all of a sudden the inflation just goes absolutely nuts. The amount of money moving, it just causes the inflation. And then, like I said, to add insult to injury, you actually had companies coming along and feeding the fire by wanting to corner the housing market. That Zillow, for example, what a disaster that has turned out to be. And actually, I'm hearing that there's a few of these real estate. There's another one that popped up on the news feed here this morning. I noticed. I can't remember what the hell it was. Now, of course, whenever I want to find these things for you, I never can. So anyway, the point being that I mean, the sad part about it for our society is they're really playing with fire. They've gone and really messed with the system. I've made and this is, what category is this? Is this Fed stupidity? I mean, were they really this dumb? Or do they understand that a society and a government can only issue so much debt relative to the size of their economy? And so once you hit that debt threshold, then the only way out of it is you have to dramatically expand the money supply, i.e., expand the size of the economy in raw dollars. And of course, that is ultimately hyperinflationary. Zimbabwe, Venezuela, Weimar Germany. Why would it be any different in the United States of America or any of these, G7, G8, G whatever Western nations who are all in this same shit show together? I listened to, you can spin this one way or the other. So if you go about the process of diluting the currency, which is clearly going to lead to inflationary pressures, i.e., just like I said, more money sloshing around the system, up go prices. Because keep in mind, a house, a tomato, a brick, a nail, a coffee cup. I mean, the relative value of those things don't change. What's changing is the purchasing power of the money. So some people are saying that the streaming is not very good today. Chris, are you seeing that? Problem is I sit here and I talk about how the central planners are undermining our existence, and you wonder whether the central planners are like, I don't think it's a good idea for the public to listen to this gentleman. And actually, it was interesting. I listened to this one podcast over the weekend where this one guy's like, you can actually go on Twitter and you can punch in a whole bunch of code or whatever, and you can actually see how Big Brother is trying to mute you, how they're trying to stifle your message on Twitter. And this guy was like, my days are numbered. I could see the algorithm is just going up and up and up and up as he's getting more and more blocked and more sort of DDoSed and all that kind of stuff. Are actually Sayed, what's going on there with all the flooding in Pakistan? Is that pretty business as usual? I read a lot in the rags here. Yeah, like Pakistan floods. They're saying a lot of people are dying from these floods. I hope you're in a relatively high ground. Yeah, you're saying it's very bad, eh? Interesting. So it's tumultuous times that we're definitely living in in, no doubt about it. Yeah, I mean, maybe I was curious as to what I was going to actually talk to you guys about today. Because I mean, the problem here, I mean, if you're a shorter, then you're loving this market. If you're the public, I mean, this is the matrix that I like to watch just on a daily basis to try and just get an idea of what the market's thinking. I don't know. Looking at that chart, what do you think? Are things slightly volatile right now? Oh, we're up and down like where's yours, as they used to say. And the currencies, and of course the risk market, like the stock market and Bitcoin and a lot of the commodities and stuff, just getting absolutely smashed here. And the S&P 500, I thought that was an interesting chart. So that's our backdrop. Now the interesting thing about this is and I don't want to sound like a broken record because I keep saying the same darn things to you guys over and over and over, and you're probably like, oh, this is a boring message. But in our library, on our blog, we have this roadmap, and I think this is a pretty good roadmap, although I don't know if this is the chart I wanted to show you. Hey, nope, that's not it. Well, I think if I'm not mistaken, for some reason I couldn't get to page 2 of the blog. Let's see if it works today. Always good to test these things live while you're on camera. That's a good idea. All right. So, and actually I was even showing a couple of guys were considering buying a place in Portugal. And according to Mr. Benner, and I thought this was really interesting, I had mentioned this to the boys, that 2023 is actually our trough. So we're still in 2022. So I'm almost reluctant to go and actually put money down right now to buy a place until we get well into next year. But the good part about it is when we're in C, right, that's actually when prices are lowest. And the key here is you got to make sure that you have cash when you're down in these C zones. If you've got cash, then, oh my goodness, sky's the limit. You can write your own ticket. And Mr. Benner, back like 200 years ago, said, in C, this is actually when you want to go buy your corner lot. So that I was trying to convey that to the boys earlier. But the problem is where are we? There's 2019-20, there's 2023. So we got to be sort of like maybe like right about here. But I definitely love the idea that we're probably gonna, we're within 6 months of a major cycle low here. Problem is we just got to get through the goddamn 6 months. It's a pain in the ass. Somebody says, if there's one major thing I've learned this past year, it's that Brian's usually right, but Brian's usually early. Yeah. So, and actually that's interesting too, because 2023, I was commenting, and actually this might be kind of a fun exercise to do with you guys. I really honestly don't know what to talk to you guys about. I mean, it's not like I'm going to want to pitch you to go and buy stuff in the market with an image that looks like that. There's nothing to buy. And you want to see, what's really fascinating is like the darlings of the market. Good old Apple. I mean, this is so cool. I'm actually pretty stoked to the fact that I actually did this trade live on the site. So nobody can say, well, Brian doesn't know what the fuck he's doing. I mean, I walked everybody through this trade. And Friday, look at that. Who could tell me what candle pattern is that, son of a gun? I mean, that's about as nasty a bear breakdown as you are ever going to see. I don't know. I guess this would be a good sales pitch. If you don't know what this candle pattern is, you better get your butt into the education program, and we got to school you up on TA. I mean, the problem now, of course, is that people are going to wake up. They probably woke up over the weekend and went, oh my God, what the hell's going on in the stock market? And they're going to think about selling now, which actually is not very smart. You can see where we were interested. And actually, I'm so proud of myself for strapping that on up there. It's a small trade, but really more importantly about this was all just demonstration. I mean, everything that I teach and everything I want to try and teach all of you how to do. I hate to say it, but basically, after my wife passed, I believe that she came to me and she said, Brian, you have the potential to make a big positive difference in this world. But she said potential. She didn't say that was going to happen. She said you have the possibility. It's trying to convey an image like that to you, all you people that really want to learn, that want to get better at this, that want to empower yourself. That, I could guarantee you, most people in the marketplace, they look at that chart and they don't even realize, like, if I just, got rid of all the drawing objects and all the indicators, they wouldn't know what the heck's going on here. They just, I don't know, it's just a price chart. It's going up, it's going down, it's going up. Should I invest in Apple? I don't know. But I believe Colonel Mustard did it in the drawing room with the candlestick. But I also believe that there are a number of ways that you can analyze these things and actually see, technically speaking, well, how ironic, technically. We as good technicians, and that's the difference between a good technician and a bad technician, but a good technician, technical analyst, price analyst, should be able to, we actually, believe it or not, we do have a crystal ball. It's cloudy and we never really know the why of things happening, but I can definitely tell you this market and just the way, because keep in mind, price action here, it's nothing more than just a reflection of human behavior. That's all this is. Well, we're all bullish, right? Remember Mr. Nancy, all right, we've got to buy Apple. And then now, clearly, and this is a perfect analogy, right? Mr. Chair Powell came out and said, hey, we're going to make your lives really, really bad. And so what did the humans do? And it's interesting, the reason why this candle pattern itself is so powerful is that the humans actually started the day very optimistic. You can see the humans actually gapped the market higher. Well, if we go down to a 9-minute, right, where is the start of the day? I guess that was right up in this area here, right? So what day is it today? 26th, right? So 25th, 26th, you can see they actually started the day heading up. Right, we're bullish. We believe Mr. Powell is going to come out and he's going to say everything's all roses and sunshine. You're all going to get rich. And Mr. Powell came out and said, actually, you know what? I'm going to crap on your head. And they went, oh, goodness, get me the hell out of there. This is an incredibly powerful message that the market is trying to tell us. And more importantly, like the humans themselves through their behavior, and we as technicians are doing nothing more than just watching their behavior. And if anything, what I like to try and teach my students is, and I espouse this myself, is what we want to do is we want to sort of step outside the box. Actually, there's a fantastic, I'll probably get into trouble for posting this, but fantastic fantastic. This was a fun cartoon series that was it was on and it kind of disappeared, but I don't know whether it's still here or not. Oh, that's not what that is. It's fucking idiots. The Big Les Show. And I know Sharky, he always, oh, maybe this is it here. Sharky always posts this in the lounge. I love this this series. Totally irreverent though. And they swear like sailors, so you can understand why Brian would like it so much. But just absolutely a great analogy of what our reality is. And poor old Les here figures out that he's actually living inside an MS Paint application. What? Really? So if anything, maybe come on the lounge, and if you want a little sort of, what is reality and where is your spot in reality? I always love this video. But what I try and teach people is can you step outside the box? Can you sort of put this all into perspective? I mean, first and foremost, fantastic, great trade level. But, maybe let's look at this a little bit bigger, right? And maybe like look at a monthly price chart. Is there something wrong with this image? I mean, fuck, how many times have we seen Bitcoin do this? And we all know what happens after, right? I mean, this is a monthly price chart. Isn't there something about like the laws of physics? What goes up must come down. Something at some point, the rubber band has to snap back in the other direction or something along those lines. I'm not necessarily saying that this is what's going to happen, but what I am going to say is I've played this game so long that I believe the statistical odds of this market trading back to this $100 level and the 50% rule here, I think are very, very high. It'll be interesting to see if that level actually gets traded to. I think that probably could happen into next, probably like January, February, March. And then interestingly enough, and this is what I wanted to try and convey to you guys earlier, but I don't know whether I'm doing a very good job of this today or not. But, this is like, can you see the forest through the trees? Can you see that there's a problem with this image? And like I said there just a moment ago, I mean, you look at the Bitcoin chart. We go through this about once every 4 years, right? You can't even see this cycle, but big up and bring it all the way back down. Big up, bring it all the way back down. Why would this be any different? If anything, it's a little bit scary in the stock market, because the stock market, Wall Street owns the politicians. So to keep this stock market fugazi going as long as possible, they're going to continually get the politicians to change the rules, change tax codes, give them tax credits, give them building credits, whatever. In this company's case, actually, they pretty much moved the entire operation overseas just to avoid the taxes. What I do find interesting is that, I honestly think that the whole damn market is actually driven by the money cycle. And what's scary about this is that most of you, I would imagine actually very, very few of you actually even know what a rising interest rate environment looks like. And what does life look like on this part of the curve, which is basically what our future is for the next, well, hell, if 2020 was the pivot, then at least we got 2 years down. So 80-year cycle or 40-year cycle minus two. So the next 38 years of what our lives are going to look like. And at the end of that 38 years, of course, that's when the cost of borrowing is the worst and everybody thinks capitalism is over. What was fascinating was back in this part of the cycle, there were guys, and I actually teach this in the education program, there were guys in the stock market in 1980 that were saying that capitalism was over. What they didn't understand was actually that was the long-term pivot in the interest rate cycle, and they had 40 years of falling interest rates ahead of them. Now, sadly, we've gone through an interest rate cycle pivot, and oh, what a surprise. We're hearing lots of talk about capitalism is over. And what's worse is in these really low interest rate environments, you get all the socialists coming out saying, hey, we can spend all the money that we want. And ironically enough, that's half the reason why this cycle pivots, is because we get to the point where interest rates are nice and low. And then these stupid guys like Trudeau in Canada and the like, there's tons of them all over the world, but Trudeau is just the absolute picture perfect model of this. He has no economic background whatsoever. He has no real actual qualifications to run an economy. He doesn't have any background. He's a substitute drama teacher, for Pete's sake. And now he's given carte blanche. Go do what you want. What does he do? He goes and fucking completely blows up the fundamental value of our country's currency. Way to go, dude. And I've heard several different international ratings agencies and growth agencies all say that it's going to take a good 20, 30 years for Canada to recover from the damage this guy has done to our society. So, hey, way to go, dude. Interestingly enough, like I said earlier, as technicians, we have a crystal ball. We don't know exactly why. We never really know what the fundamental reason is. I suppose, any Canadian that lived through Trudeau Sr. should have seen this coming 100 miles away. God, I know what the reason is. You're going to have some idiot come in here and just start spending money like a drunken whore. And hey, doesn't give a fuck. In fact, not only is he going to spend money, he's going to actually print money out of thin air that he doesn't even have. Just, well, too fucking bad. And if it's inflationary, well, it's inflationary. That's the way it goes. And so as a result, the whole damn cycle starts. The reset button is hit, and we go through the whole damn thing again. And we're going to get to the point where these governments are so strapped, they're so, we might even find that some of them, like, no offense, but a country like Canada technically is bankrupt. So if at any point in the future, and I don't know, you tell me, do banksters ever do this? But if any point in the future, the banksters go, you know what, your credit's not so good anymore. We're not going to lend you any more money. What does a country like Canada do? Uh-oh. And, keep in mind that at the end of the last greed cycle, actually, about 5 to 10 years prior to the absolute apex of that cycle, there were votes in this country to break the country apart because the financial situation was so bad. So I would fully expect that we go right back into that kind of scenario. And I can tell you right now, there's one province in our country that, the Trudeau family has a history of screwing this province over, and they've done it again. So I'm not going to name names, but the point is, any Canadians out there, poor old Alberta. So it's almost like it's a self-fulfilling prophecy. Like I said there, we as technicians, we can see the future. It's pretty obvious what's going to happen. Um, and it's always interesting as technicians that what we get this sort of why did this happen? I guess earlier I was making reference to Mr. Benner. Now, I suppose the one thing that has me scratching my head about all of this is, and I heard, I watched an interesting video over the weekend. I don't think I tweeted it out, but I actually followed the guy because I was pretty impressed. A very, very smart individual. I don't know whether me minimizing that window just killed the YouTube feed. If it did, my apologies. Chris, are we still rocking and rolling here? Trying to show you what I was watching yesterday. Right, it was wrong one. Did I? Oh, there it is. That's not weird. So actually, I didn't minimize it. I kept it up, but I just had another window in front, and so even just having the window in front insults the video ninja. All right. Okay. Well, what I wanted to show you was. Yeah, I mean, I don't know. Do you get into trouble mentioning these things? I have no idea. But I watched a really cool video interview. Where is it? It was a guy named the Pamp or something like that. Actually, no, that's a guy, that's a student in our class. But what's interesting is that this guy's name is very similar. Anthony Pumping or something like that. You probably all know who he is. Anyway, he had a really interesting interview with a gentleman yesterday. All right, it was pretty recent, maybe over the past 6 months or something. And geez, you listen to these guys, and it's like the end of the bloody world. These guys, 2%. This guy here, very, very intelligent gentleman. But the problem is David Collum, probably a lot like Brian. And again, I don't know whether I've screwed the YouTube page up and stuff. I sure hope you guys can still see me and all that. But I would actually recommend that you guys watch this. It's with this gentleman. You guys probably have seen him before. I think he's pretty popular in the crypto space. But very, very enlightening interview. Yeah, probably not best to play this stuff here, but anyway, go watch that. But a really interesting guy. I mean, they go really deep down the rabbit hole with all this sort of conspiracy talk and all that. So yeah, I can understand. We got to be careful with YouTube, and it'll freak out. Yeah. Oh, Pomp. Yeah. And what's interesting is there's somebody on YouTube, and I think actually just did the education program, and his name is the Pamp. I don't know whether that's, are you related? Are you brothers maybe? The Pamp. Anyway, I think it's probably somebody else. Anyway, the point being that it was a good conversation, but he pointed out that something like 20 to 30% of the S&P 500 companies cannot make their interest payments on their debts. And I'm not saying they can't pay down their debts. I'm saying they can't even make the interest payments on the debts. And the Fed is talking about, we're not even close to being done raising interest rates. So the cost of borrowing is going to continue rising. So does this not lead to some sort of crisis scenario? And the big debate that I have in my brain right now is through this whole window from basically about 1980 to 2020, the underlying theme was that short-term interest rates were falling, and the yield curve, well, not the yield curve, but the yields on debt, the trend was down. And I might argue that this has everything to do with celestial cycles, and celestial cycles are nothing more than just a big stopwatch that's running in the sky. And all of this stuff just moves in a very circular fashion. So is it the planets that cause the interest rate cycle, or is the interest rate cycle just a function of the universe and, just the yin and yang about the way the universe works? Long and short of it here, we've gone through an interest rate pivot. The fact that it happened through a Jupiter-Saturn cross, and how I've seen literally in my career, when I was a very young boy, I watched the Jupiter-Saturn cross in 1980, which was the start of this cycle. Then I watched the Jupiter-Saturn cross in 2000, which was the end of that particular greed cycle, and then we're into our fear cycle. And now we have another Jupiter-Saturn cross that is clearly demonstrated another pivot in interest rates here, and sort of a different part of the economic cycle for us to have to go through now. This is a tricky part of the cycle, because now, prior, if those companies couldn't make their debt payments, well, the Fed could always come along and just print more money and just move all those debts over to this side balance sheet. Interest rates were very low and they were still trending lower, so they didn't have to worry about debt servicing costs. But we're not in that environment anymore. We're in the environment now where when the Fed pulls the trigger, instantly the inflation shows up. That's, I think, the biggest thing that has changed here in the economic backdrop. So, given that situation, can the Fed come to the rescue of the stock market now? Maybe what ends up happening now is that this anomaly, which for lack of a better word is nothing more than, that's a parabolic curve any way you shake it. Maybe this now has to come back down to earth. And frankly speaking, that's probably a better 50% roll. The irony of Apple, this is what absolutely kills me about a company like Apple, is I was a stockbroker all through this period here. All through here, right? I actually got my broker's license right, I guess right about here. And what was so ironic about Apple was I remember when I was sort of studying and student of the market, because I went to university in this time period and got sort of my first jobs and stuff. And I remember there was one guy in particular, Dr. Hans Block, and he was loading up on Apple stock, accumulating it. Every time he'd go on the business channel, I'm buying Apple, I'm buying Apple, I'm buying Apple, I love Apple, I'm buying Apple. And I don't know, you tell me, how did Mr. Block do? I think he did okay. You can't even see where the hell he bought. He bought at minus 13 cents. Imagine that. And who knows? He's probably still long. That's the irony of it all, but I hope he paid himself a little bit. But do these keep him? And I don't even know whether many of you were even alive through this period. But I remember through here, you couldn't give away Apple stock. You literally couldn't give it away because, back in this period, Mr. Jobs was politely removed from the Apple board of directors, and Wall Street sort of took over the company, and they just tried to turn Apple into like an IBM, and it just didn't work. And they just basically drove it in the ground. Then Mr. Jobs came back. I think it was after the dot-com bust. And I even remember they had those funny, remember the Apple computers? They look like big sort of, I don't even know, they almost look like cartoon images. Dr. Hans Block? I doubt Dr. Hans Block gives a flying fuck what the hell Brian Beamish thinks. But nonetheless. Anyway. The point here is it's fascinating to watch how the market moves and how you guys all move. Everybody in the world thinks that basically Apple walks on water. And, though, when I look at an image like that, you guys have all been through these damn Bitcoin cycles. And the great part about Bitcoin, and this is the number one reason why I think Bitcoin will continue these, is do you notice that Bitcoin here, this is only a weekly chart. And it started to look like that Apple chart, and then instantly they clean it up. So this process right here actually is the market telling you, first off, V top. What do we say about V tops? Do we say something about V tops? Are they long-term cyclical tops? Not usually. So at some point down the road, you got to expect that V top to be tested. But in essence, by them bringing the market all the way back down here, they're cleaning up this overbought, unsustainable situation, which ultimately, when all the public loses interest, then in comes our W's, and we start the whole damn process all over again. And what's really cool about Bitcoin, and this is where I'm at a bit of a conundrum with the US Fed, because based on the happening cycles, I think Bitcoin's sort of built-in rise-only market. That's under the assumption, of course, and you just saw fucking Sleepy Joe do it there. And go watch that video with that David Cullum. He's like, Sleepy Joe just pulled $500 billion out of his ass to go and pay off all this student debt. $500 billion. Don't you need some sort of like congressional buy-in or something to go and just spend $500 billion? No, evidently not. He's doing $500 billion financing of student debt out of an executive order, and he's kind of like, I don't think that that's going to fly. He did say it's beautiful politics, and if it's one thing that Joe Biden definitely is he is a career politician. He knows how to play the politics game, which sucks, of course, because there is no connection between politics and good economics whatsoever. If anything, they're probably inversely correlated. Good economics translates into bad politics, and good politics usually transitions into horrific economics. So, is anything changing here? What does it take for these yahoos to stop this sort of behavioral pattern that's been put in place since like literally the days of Eisenhower? And really, I think you could actually even argue the days of Franklin Delano Roosevelt. Because really, I would make the argument that that's sort of the basis of our modern day politics-driven economics, which is horrible for the value of the currency in your pocket. I mean, how can a guy just out of nowhere just say, oh, yeah, here's $500 billion, poof. How are you actually paying for that? We don't know. Do you have the $500 billion to pay off this student debt? No. And if they, and this is the interesting part about this is, and this is why I think it's all politics. If you vote for the Republicans, is the this coming November, is the odds are that that's going to be clawed back? Probably, because it's bullshit. And here's the kick in the pants. If you vote Democrat, is there still a likelihood that this thing totally lands flat on its face? Because you actually have to get congressional approval, and you know how hard it is to do anything in the US Congress. So is it even realistic that this is even going to pass if you vote Democrat? Well, there's no guarantees, and actually the odds are pretty slim. So it's beautiful politics, but horrible economics. And so as a result, what I think ends up happening here is nothing's going to change. These silly politicians are going to continue diluting the value of the currency until the banksters simply say your credit's no good and we're not going to lend you any more money. The one thing that we've heard out of Powell, and I've heard unequivocally out of all the banksters, is they are definitely on board with the US government. The US government and the banksters are basically, the politicians are in the banksters' pockets. It's as simple as that. And of course, that started with Jekyll Island. And it's basically been the same story since then. So banksters get what they want. Their all their bad debt that they're floating will just be rolled over. And they will continue to inflate the economy and deflate the value of the base hegemony currency as long as this game goes. So as a result, I don't think anything actually changes with the Bitcoin story. And it's almost like whoever built Bitcoin knew that nothing's going to change in Washington. Then, yeah, there'll be job owning. Oh, yeah, we're going to try and, tighten up our spending. We'll try and reduce the deficit. We're going to pass legislation called the Inflation Reduction Act. All this bullshit that's fluff. But ironically enough, it just continues the same policy over and over and over. And the worst part about all of this, and this is what drives you crazy, is, through relatively good times, ironically enough, that's when you're supposed to pay down your debt, but we never do. But that's what you're supposed to do. But through relatively good times, that message of austerity is actually palatable. I mean, you're supposed to do it, but even still, and Canada is a great example. We just went through a 20-year friendly commodity market where commodities, very high price. Canada should have taken the opportunity as a commodity nation, collecting so much money from oil revenues and all that it should have paid down its debt. Now it didn't. And in fact, the stupid Canadians actually went and increased their debt through a period that was economically friendly. Now, what happens to a country like Canada if we go into a commodity bear market? And what happens if those revenues that, were very, very friendly from 2000 to 2020, all of a sudden dry up and they just almost disappear? What does a country like Canada do? They were supposed to be, and it's funny because, and it's almost the same thing in the States, like through the greed part of their cycle, when their economy was booming, the dot-com boom, they reported 1/4 of budget surplus, 1 freaking quarter. And I remember it was Q1 2020, 2000, God, 2 decades ago. And Bill Clinton was like, oh, I'm the man. I did it. I balanced the budget. I, got us to run a surplus. And, they even had things like the Palestinians and the Israelis were actually shaking hands and talking about peace and all that. And then like literally that was the pivot. And then we just went right back into deficits. So through that greed cycle, that's when the United States of America should have been paying down its debt. But nope, we had 1/4 where they ran a surplus. And in the Canadian scenario, there was a prime minister that was before this buffoon that's in there now, who was fiscally austere. And so as a result, like I said, good economics usually translates into horrible politics. And, most of the country ended up hating the guy by the time his tenure was done. I think there were some things that he could have done better, like sort of PR wise, but it's here nor there. Point is that he actually 1/4, he actually tried to pay down some of Canada's debt. And he ran into a brick wall of opposition from things like the banksters, right? They do not want you to pay down that debt. They want to keep you in financial slavery. And they basically live off of the interest of your debt. And then as soon as you can't float any more debt, they send you to bankruptcy and, they foreclose. And you know how the IMF works with third world nations. Well, first world nations is the same damn thing. They just go in there, steal all the assets at penny on the dollar, and then float a new currency system with a new government that replaces the old one and start the whole game all over again. So I believe because of what I'm seeing out of Mr. Biden, they just don't get it. And there's not going to be any change. You're going to have to get used to the fact that your loaf of bread is going to cost you $50. 40 years from now, that loaf of bread will be, if we're still using this current hegemony system, which I doubt we will be, it will be $500 at that time. Not because the bread's any more better. It's because the value of the currency in your pocket is getting worse and worse and worse. And so that brings us back to Bitcoin. And interestingly enough, something like an Apple can just continue to rise, keep doing this parabolic move, right? Because it's political. And this market is highly manipulated. And this company will actually even jump from country to country to country to keep this fugazi going. Bitcoin can't. So as a result, when Bitcoin needs to correct, because it just got way too frothy, and it does this a lot, folks, get used to it. If you're interested in this Bitcoin space, I've been in this space now since basically 2013. I've watched this thing like a hawk. And basically the behavioral pattern is almost identical. It goes parabolic, but then it quickly cleans that up. Why? Because Bitcoin doesn't have the luxury of jumping countries. It doesn't have the luxury of buying politicians. It is based purely on the algorithm. And of course, the algorithm, I think, and this is Brian's opinion, is all about cost of production. What is the value of one of these things? Now, it would be really interesting if we had a world of balanced budgets, if we had a world of, well, banksters, you can't go and lend more money. And, the little video that I shared with you, Mr. David, he specifically says, wouldn't it be cool if we actually had a scenario where if you wanted to borrow money from a bank, you had to actually prove that you can pay the money back? Wouldn't that be cool? Doesn't it make economic sense? Makes sense to me. maybe I'm a weirdo. I don't know. So as a result, the stock market, and you look at something like the S&P, it's just as bad as a company like Apple. Is that it just keeps going and going and going until somebody says, you know what, your credit's no good anymore, down you go. And this scary part about that is we have not had that kind of environment for a very long time. We've been in a falling interest rate environment where nobody's really said boo about credit. And I believe that has now changed. Now, the interesting thing, the debate about all this, right, is will the democratically elected politicians, I don't know, maybe I'll do this on a new one. Well, I guess it's fine. Will the democratically elected politicians allow a serious reset to happen? And I don't know what the answer to that is, to be honest with you. In this whole environment, anytime we got into trouble, the politicians would go spend a whole bunch of money they don't have. The Federal Reserve would take short-term interest rates down to as low as possible to ensure that the market sprang back. But this was all in that environment where, hey, your credit's good, interest rates are friendly, don't worry about it. We're not in that scenario anymore. So I don't know how this plays out. And if anything, I watched a really interesting Chico video there the other day. Good old Chico crypto dude. And, the scuttlebutt all along has been that ultimately you should be able to buy a house for 1 or 2 Bitcoins. In this scenario that we're in right now, and if this stock market is rolling over, I mean, you see the head and shoulders. I mean, the irony of it all. I remember we used to work with this guy, Da Vinci, and we used to call this the Da Vinci nightmare. Now, I don't know whether this has played itself out or not. I mean, you might argue that that actually has not completed. But we made the argument that at some point down the road, the emperor, of course, is going to be shown to have no clothes on. And the market has to come back down to earth. And in a weird sort of way, if I can get this damn line to line up, which I can't, so give me a second. Yeah, something along those lines. Mind you, that is a lower low. So. But anyway, something along those lines. You can see where support is on this. And actually, it's interesting that Mr. Somebody says, can someone let me into the show? Chris, are you letting people into the show? I don't know how the show works. The show must go on. I'm not quite sure how that works. Chris, any ideas there? The crypto. Oh, yeah, there you are. You're over there. Did you just put that? Good to go. All right. Okay. I'm a big fan of just simply drawing trend lines for the market to tell you where it kind of wants to go over time. We can draw all these this is like high to low trend lines and low to highs and cycle pivots and all that kind of fun stuff. But you can see, I mean, there is room to fall here. And of course, if we break through this one, then we'll probably head down into this area. Could there be some sort of great calamity in the U.S. economy? That Mr. Callum guy said that 20% of the S&P 500 companies cannot make their interest payments. So I don't know what it looks like. And the question here is, if Sleepy Joe can pull, now $500 billion out of thin air to pay off student debt, I mean, are they not going to have another, if the market really cranks down here, then we're going to get right back into that. Shouldn't we be mortgaging our kids' future? Shut the fuck up. Biden needs another $10 trillion. Give it to him now. Right? And that kind of nonsense. But I do like the idea that because interest rates are rising here, now, if these governments go and do these spending programs, it actually is going to jack up interest rates even more, and it's going to create even more inflation. And I might actually even argue that the reason why you heard Jerome so matter of fact, I couldn't believe when I listened to that speech on Friday, how matter of fact it was. He wasn't even really that apologetic. He was just like, nah, we're going to inflict pain on you. So I get the impression that he is actually trying to send Mr. Biden a very clear message. Look, you can't keep doing this. If you keep doing this, we're going to have to keep cranking rates up to the roof. You can't keep coming to the market and defending the market. You just can't do it. It has to break. And he's even said, we intend to make you feel pain. Well, most people are invested in the market. Most people are invested in these homes. The way that they're going to feel pain is those prices are going to fall. So it'll be really interesting to see what happens when the market breaks and these socialists are like, let's go spend more money. Shouldn't we be mortgaging our future? Shut the fuck up. All that kind of nonsense. To go and save the economy. That might just translate into Fed has to come in, do another emergency 75 basis point increase in the rate of short-term interest rates. This is a tough part of the economic cycle, boys and girls. Please understand this. And it makes perfect sense that, I, as a student of history, I always would look back and go, the 1920s and 1930s, man, it sure was tumultuous. And, how does a guy like Hitler come to power? It turns out that he was bankrolled by a lot of Western banksters and all that shit. How did the Soviet Union actually come into existence? Turns out that was actually all funded by the banksters to topple the Romanovs. So, sadly, the banksters are basically hip deep in this. They're driving the bus. And now, because the interest rate cycle has turned, I don't think it's as simple as just, hey, we'll go borrow more money to solve the problem to keep propping prices up. And, FYI, I thought it was interesting. This Mr. Callum guy, he said that in his economic modeling, he could realistically see, in fact, I think he even said like 1800 on the SPY. And frankly speaking, as a technician, right, that makes sense. That's not really out of the question. That looks like a pretty good support level. And I remember actually specifically when this buy signal came in the stock market. And I remember that we had this one guy on the site. He was a pretty darn good trader. And he was uber bullish right through this window here. And I remember, our dashboard. And at that point, it was sort of like our I'm going to say it was our WordPress version of this system. Now we have it like as our own actual website. Congratulations, Stuart. You brought this thing into the 21st century. And at that point, when that buy signal came in, the S&P 500 was like minus 90 and on both the short and medium term. And if anything, I kind of like this scenario here, where you see how long it took for the market to go from, really you could argue there's the top there, but it made a slightly higher high there, to ultimately issuing that buy signal right here. That was the better part of a year. So basically a whole bloody year had to go by with the market correcting. And this is the process, the dashboard. This is the process of this going from this image to actually flipping around, where slow is washed out and it's right at the bottom and it's bumping along, and fast is turning up and Wing out and starting to rock and roll back to the upside. I don't know whether it's going to take a year, but interestingly enough, if we go back to Mr. Benner, right, it's mid 2023 when we should actually be looking for that pivot. And what I really wanted to do earlier was I wanted to show you guys that what usually happens in the stock market, I don't think I can do it just on the fly. So I'm just going to just sort of, write it out here. But usually what happens in the stock market is either your year looks like, that's one blank page, right? Either your year looks like this, or your year looks like that. So either, and what a surprise, everybody at TRI goes, oh, M's and W's, blah, blah, blah. But usually, do this if you want sort of a fun, what's that? Thanks for tweeting this video. Glad to be. It's been a minute. Hey, Brian. Oh, hi, Nick. Nice to see you. So the question ultimately, at any point in time, you can do this. What does your year look like? Does it look like we started out with a big rally and then we paused mid-year and then we counter-trend rallied into the end of the summer, and then they don't call it the fall for nothing, and we usually sell off into the fall? That's a very typical scenario. So this would be like your sell in May and walk away. And of course, this would be sort of, your October. They always say September is the worst performing month, right? September, worst month. So a lot of times the market looks like this, right? Sort of, and then, sort of, this is like the end of June, beginning of July. That's a very typical year in the stock market. And then we usually top out the end of August and then roll over. Uh-oh, is that what this year kind of looks like? Maybe. So there's, so there's your May peak right there. This time it actually came in April. Then the summer trough, then the September, October rally. So this, this is just Apple, and this isn't the broader stock market, but just as an example, right? So this one would be, where are we here? Yeah, up, down, boom, right? And then I think the prognosticators are looking for some sort of dead cat bounce into the end of the year. And hell, this might even be something like that, right? And then what's scary right into the end of the year is I have a sneaky suspicion next year is start off strong. We trough in February, March. We rally into the spring, then pull back into the summer, and then rally at the end of the year. So your year starts to look something like, like that. So hopefully you can kind of see that analogy. And I'm, like I said, I'm just using this stock. I mean, I could do it on S&P, but there's a typical M year. And this is what I think 2023 is going to look like. And if anything, this makes perfect sense because Brian, right, is usually right, but he's usually early. And what this whole thing means is that you don't really have any business buying any of this shit, buying anything, which of course, hey, I'm in the sales business and I'm basically telling you, don't buy anything. Now, wow, what's my commission check going to look like at the end of the month? That's not good. But really, I don't think anybody should even touch the market until we get over here, right? And we go through that second trough, that, sort of latter part of 2023, and coming out of 2023, we start the big bull market. And the interesting thing about that is if you think about Bitcoin and the way that it bottomed this cycle, right, 2015, I think it's exactly the same. This is what I think our path is going to look like. And you notice that in this particular case, I don't know whether this is going to line up, but we'll just try it. Where the hell is that damn thing? There we go. I suppose you could argue there is the beginning of the year. So we went down, down. Actually, this one went all the way down, eh? But anyway, something like that. So maybe lots of M's, right? And then notice this year, 2015, trough right at the beginning of the year, then up, right, middle of the year, then down into the fall, and then breakout into the end of the year. So can you see how we have ME over here, WE over here? Do you see how that works? Can somebody just, I don't know whether I've explained that very well, but this is an incredibly important concept. If you can figure this out and you can get this into your head that every single year is either going to look like an M or it's going to look like a W, I tell you, this is wicked edge. I don't know. Did that make sense what I just tried to show you guys? Anyone? Bueller? How about that Bueller guy? Did he get it? Hey, there's Eddie. Dude, so, hey, our meeting this morning, do I really want to go and get all excited about buying? I mean, here we are. This is Apple. But let's call this Portuguese real estate, right? You could argue that this is actually very similar to all the real estate market. It's actually almost identical, right? Everybody is like, all right, the market's going to top. Okay, that's it. And then we've all come screaming back here. And then, of course, fucking Sleepy Joe goes, hey, look, I'm going to give you a whole bunch more free money. And the Fed's going, what the fuck? We put a top in the market. We want this market to correct. You see where the 50% rules are. You see where Beamish is shorting. We know that cocksucker is right. He's usually early, so it's going to fuck around here for the next little while. But ultimately, we want the market to come back to this 50% rule. And how long does this take to play out? And this is a really good example where Brian's like, we're in this correction phase and the Fed, don't fight the Fed and all that bullshit, right? But this is going to go on for the next fucking year. It's going to be a pain in the ass. Now, the good part about this is, like I said this earlier, and actually Mr. Collum there, he said it also too. Do you know that in the 1930s, it was the absolute best time to invest in real estate? People made a killing investing in real estate in the 1930s. But what was the bank's propensity to lend you money in the 1930s? Anyone? Were the banks willing to lend money out to people in the 1930s? No. So that meant that if you wanted to take advantage of that awesome real estate market, you had to have money. You actually had to be able to have the cash to be able to step in on the buy side down in here. And this is a weird sense of deja vu that I'm having. I feel like I've had this conversation before, especially with regard to the way that the S&P 500 bottomed. The way that it did through this. This feels like it's almost a repeat of history, to be honest with you. Now, this one wasn't so bad. In fact, this was sort of like mid-cycle. So the correction wasn't really that deep. But nonetheless, I mean, this is the irony of corrections, right? When you're going through this correction right now, from peak to trough, the market fell, you can see, about 15%. And at that time, right, 15%, we're close to official correction, recession, blah, 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 blah. It's always the worst crisis. Always, this is the worst crisis. But the point of the matter here is that when the market turned up here, and if I'm not mistaken, I mean, this might be an interesting analogy, 2016. Let's see where we are here, 2014, 2000, yeah. Maybe yes, maybe no. If we look at the interest rate picture, here's 2016 right in here. So interest rates were actually just starting to rise for the corporate market. Interesting to see what the Fed funds futures were doing through that. Do we have that on here? It's got to be one of these. These are bonds. What's the Fed funds? It's like QZ or something like that, isn't it? Nope. Fed funds. There it is. ZQ. Oh, that's close. Yeah, let's see if this works. Ah, crap. We were just getting into the conversation. All right, so interesting. There is sort of mid 2016, so the Fed was just starting to raise interest rates. Interesting how now they're just cranking rates up big time, eh? So, I don't know. Did you guys get any value out of that? What do you think, Chris? Was there anything that I just said there for the past hour and a half of any value? Hope so. Anyway, God, it's incredible how quickly time goes, eh? I know somebody says priceless. Okay, so I got a half an hour. You all know, number one priority in my life, of course, is my boy. And he loves his car rides. So we got about a 5-hour car ride ahead of us this afternoon. But I love him with all my heart. And if it puts a smile on his face, then we are off driving. So got to leave here. Got to wind this up by 12:30 here. So we got 25 minutes. And thank you very much, Chris, for reminding me. I really appreciate that. Okay, so then let's just attack these questions. There was a couple questions people asked. So I don't know. I kind of feel like I left you just hanging there. But if it's one thing that you can really learn about the market, maybe that's the big thing I was supposed to teach you guys today is take a screenshot of this. It's quite remarkable how the market either does W's through the year or they does M's. And at any given point in time, you can always ask yourself, where are we with the W's and the M's? And really, I mean, I gotta say that this Bitcoin, this is a perfect example. And this is actually what I think is going to happen next 2023. And if we're going to go and buy a big whack of real estate, right, this is actually when we want to do it, is through this mess. Now, yeah, okay, I'm just going to leave the conversation at that for now. All right. Let's see what else. Oh, and I thought it was interesting, just as a final note. I remember actually this used to be a really popular stock in the States, Stillwater Mining. It was one of the only major platinum stocks in the States. But Mr. Callum, and it's interesting, you look at gold and Barrick just put in an M top. Look at Newmont. Newmont looks like crap here. What the hell's going on? I thought there was supposed to be inflation in the system. This is so bizarre what's happening here. But Mr. Callum did make a comment that he really likes this Stillwater Mining. I don't know. I'm kind of torn. You know, obviously you can see there's a big fat M staring us in the face. So I'm not sure whether I'm really ready to go and buy any of this right now. But God, listening to him, he was saying that the things that he likes right now are the precious metals. But I don't know, man. I look at that and I'm kind of like, you know, maybe it's a good idea to buy, but you know, everything that I teach you guys, where you all should know exactly where I want to invest. Right. And if anything, all you guys that have been working with me a long time, you all know how much I absolutely love 78.6s. And gee whiz, look at that. You can actually see that through here, pretty clean price action, especially this dump here. It actually cleaned up a lot of the mess down in here. But oh, hello, look at these gaps. There's a big gap there. There's a gap there. And actually, the gap actually starts there, believe it or not. And there's a gap there. And there's lots of gaps down in here, right? So you know what, a comment that he made that I kind of like is that he wants to sort of pick the companies that he wants to buy. And then if and when you see the whole damn market collapse and, you know, break and, oh my God, this guy's falling. Well, that's when you get filled on these things down at the bottom ends of ranges and stuff. So I will be keeping a close eye on this thing. And if it gets down into this $4 or $5 area, I think I might go buy some. I like that idea. I like platinum. Platinum's kind of a conversation nobody has ever talked about. Yeah, well, geez, we don't want to look at versus M2, eh? Then it gets really depressing. It is shocking. And this is, you know, I try to convey this to people. Do you think that the oil price is high right now? I mean, honestly, you know, just give me a straight answer. Do you think that crude oil at $100 a barrel is actually expensive? And here's the kick in the pants. And this is why probably a guy like Vladdy gets so pissed off is that, okay, well, you know, there's crude oil and I guess it's moving up and all that. No, but let's go look at this over, you know, I don't know, maybe let's say the past 10 years, 20 years. Is crude oil prices actually high? There is the George Bush peak in crude oil. Right? In fact, actually, that was right into the end of his presidency. And I remember this. It was shocking. I mean, here's the problem is that, you know, I definitely, and Mr. Collum sort of pointed this out, I definitely agree. The Democrats look like they've completely rigged these elections. I mean, it is staggering how blatant the corruption is in politics these days. So there's no way in hell you can actually come to any of these conversations and say what the Republicans are better than the Democrats or the Democrats are better than the Republicans. I mean, they're all cut from the same cloth. So this was, I mean, I hate to say it. I think that this was the end result of, ironically enough, this event right here. And I would be curious if you guys even know what this event is right here. What happened right here? A gentleman by the name of Ross Perot completely sandbagged George Bush Sr. And I believe after that event, George Bush Sr. literally spent the next 10, 15, well, I guess basically 10 and a half, 15 years plotting the demise of the United States of America. And he used his son as the tool to carry out the plan. And what's so ironic is that all of the guys like Cheney, and actually, I watched another really interesting Chad Joe Rogan yesterday on the video Cheney, I think it is, or VP or something like that. Oh, did they kill the stream? Let's see. Let's see what the delay is on YouTube. So I waved, and no, it looks like it's still going. Hey, there we go. Yeah, still one. We don't even want to get started with the Rothschilds. I thought it was interesting. Stuart pointed out that to save a castle in Europe, the owner of the castle had to marry a Rothschilds. That was the only way he was going to be able to save his castle. I got to go marry a Rothschild. Anyway, finish off this story. Mr. Bush Sr., I believe he put into place all the requirements to basically dismantle the United States of America. And literally, I mean, it was fascinating. Basically, they ran the U.S. government. I mean, geez, the war and all that. You know, I heard a guy yesterday say that really, to all intents and purposes, the entire executive branch of the United States government through that Bush Jr. should have been taken to The Hague for war crimes. There was no justification whatsoever for the United States of America to invade Iraq. None. I mean, yeah, Saddam Hussein was a pain in the ass, but on a sort of, and the worst part about it was after the end of the Second World War, the United States of America convinced the world, hey, we'll be the world's policeman. We will be the good cop. We will stand on the corner and we will make sure everybody, plays by the rules. And you could make the argument that that whole Iraq nonsense, it was all fabricated. It was all a lie. So that's the world that we're living in. Now, here's an interesting caveat to all that is, there's Vladdy bitching and complaining about, Ukraine and all that. I mean, is he not, if the United States can invade Iraq with the way that they did, is Vladdy not entitled to invade Ukraine? Oh, well. Point here is that the oil price is a mere shadow of what it was. And it's incredible because I remember distinctly through this window, literally watching every single Republican politician in the United States of America just basically jump ship. It was like you could literally see the rats fleeing the ship as this was happening. I mean, it was just shocking how brutal it was. And housing crisis and all that bullshit. And the irony of it all is that the housing, that was a minor factor in all of this. Anyway, so they deleted the fuck out of the currency. And so now, even though you think you're paying high prices at the grocery store, you think you're paying high prices at the gas station, you're not. It's just the things that we have in our pocket to pay for this stuff are worthless. Thank you, politicians. Thank you, Big Brother. It's all just a big crime. I mean, for lack of a better term. And I've said this repeatedly, and probably that should be the name of the book. I think what actually happened here was like literally the crime of the millennium. I mean, it was like there on a relative scale, I don't think there has been a bigger crime committed than what you actually just saw happen over the past 20, 30 years to an entire generation of human beings on this planet. It's remarkable. Okay. How much time do I have left? I just wasted another 15 minutes. I'm sorry, everybody. I'm supposed to be answering questions here. Okay. Oh, look at that. And you guys are even putting more questions in. Damn. Okay. I got to do this in 15 minutes. So here we go. I'll try and do this as best as I can. Oh my goodness. There's a bunch of questions. Okay, anyway. Number one, if we are in a proper bear market, i.e. crypto November 21 to June 22, okay. Can I still trade bullish setups on lower time frames? Sure. I don't see any reason why not. 1 hour charts seems counterintuitive to go against the overall market trend, but there are price retracements all the time. Right. And so I was reading this earlier on. I mean, the question ultimately here is like, let's take this 14 bear. Could you have found, like on a 1 hour chart, little trade setups? And actually, I even remember this one specifically because we took it, where this was China banning Bitcoin. And then, I mean, this was, in fact, in our education program, we teach liquidity events, and news-driven events are liquidity events. And the market was just getting sold off wholesale into this event because of the potential of China banning Bitcoin. Then there was a wicked counter trend rally right off of sort of the event. It was like a sell the rumor, buy the news. And then things went really dormant. Now, you could look at this chart and go, gee whiz, Brian, that's a lot of M's. This is a bear market. I probably shouldn't touch this. But I know for certain that we all were watching the charts like hawks, and we had a fundamental event coming up here. This was the first Silk Road auction of seized Bitcoins from Silk Road. And God, you never even hear from the guy anymore. Tim Draper was the guy who bought them, and he paid $650 or so, something like that, for the coins. And there was a very, very good trade that set up on that move up top there into that auction event, right? And just eyeballing this, if you had hunted this inside bar reversal, and of course, this is a weekly charts of dailies, lower time frames, hourlies, 4 hours, there's great bullish setup here. And you can see it produced like a 4-to-1 risk reward. Can you trade that? Sure, why not? I don't see why not. I know there's a lot of people that sort of say, well, you really shouldn't take trades bucking the overall trend. But, keep in mind, every single day on the site, we're in here trading futures. Right? This is my futures matrix, if you will. Now, I might argue, and this, I guess, is a bit of a funny irony, but I might argue that, here's the September contract. What I do in the morning, because I'm a day trader, this is what I do, is I will trick out my charts with all my trend lines and support lines and all that kind of fun stuff, did options analysis and the whole damn thing. And, you can even see here coming up against these key lows here, if I drill down to like a 4-hour chart, so that's this market coming into these lows here. So when I wake up in the morning, and of course on the site, if you read my blog, and I basically update the blog my trading journal every day, I even point it out. And this is what I do. This is my process, is I'll wake up in the morning. I notice that price is coming into horizontal support and resistance, and maybe it's fog and bombs, maybe moving averages, whatever. And then I'll even write on the chart that this is a respectable trade location, and I can hunt long setups to try and trade that counter trend rally that I'm expecting off of this key support level. So, let's see. Oh, isn't that weird? So even if I fucking cover it up, it disappears, eh? What the hell is up with this shit? The ninja thing, it has to actually be on top of everything else or it gets upset. All right. Is it still working now? Okay. So the point here is that I am constantly hunting setups, constantly. Now, Friday was an interesting example because you could see, I mean, they tore the market a new one. And I actually was hunting 2 long setups and I got stopped out on both of them, right? Looking for some sort of dead cat bounce back into 50% levels. I took my shot. As you can see, I wrote up, I lost $113.75. I took my shots and it just didn't work. That's a day trader's life. It's not really like you're right or wrong. It's, I had the market coming down. You can see the dotted lines. So that's those horizontal support levels off of the higher time frames. I looked at my indicators and I start to see bullish divergence, and I see Willie stupid. I start to see inverted head and shoulders. I see where 50% rules are. I've taken these trades so often that I know that they work about 60, 70%, somewhere in that area. But clearly, with the Chair Powell train wreck markets state on Friday and the market just collapsing, well, I took my shots and it didn't work. So it's not really like, no, it's against the law. You're not allowed to do that. What I would say, though, is this is a professional trader's life. If you can't handle the fact that you go 0 for 2 and you actually have a losing day and you have to book the fact that you lost money coming in and just basically fading the sell-off, expecting things like, we have an ATR script, and keep in mind, ATR stands for average. So on average, I'm looking for, there we are. So there's the average ATR. So anywhere below this and coming into these horizontal support levels, I'm thinking, well, the average, we're below it. Maybe we're just going to check the mean. It happens. In this particular case, no, they opened up the floodgates and there just wasn't any looking back. So the short answer to your question is I don't really mind one way or the other, but you have to be professional enough that if your setups don't work, then you just got to get out and you have to take the loss and come back again, fight the game again tomorrow. A lot of people can't do that. So keep in mind, 80, 90% of the world, in fact, I would even say like 90 to 95% of the world, almost everybody that tries to live this day trader life, they can't do it. It's too difficult. So I would say that to make it as easy as possible on yourself, try and, obviously you're going to have your trading plan. And I would suggest that, if you are hunting long setups and you're thinking long, then you better have a pretty darn good reason against something like a 4-hour chart. This happens to be a Tesla 4-hour chart. But, against a 4-hour chart, you better have some pretty good reasons to take your shots. And if they don't work, then you better have religion and you better make damn sure you follow the rules and you take your loss and come back again and fight again tomorrow. On balance, most of the public, I would say this isn't really very healthy for you. It will drive you crazy because some days you'll come in, you'll buy this level, somebody will sneeze, the damn market will reverse back up and you look like a genius. Other days like this, it will just keep going and you look like a fool and you just have to live with the results. The most important thing for a guy like me, as you can see from here, is that when I take my shot, the risk is relatively limited. And if I'm right, you can see I'm going to get paid commensurately. So hopefully that's some food for thought for you. We can always talk more about this tomorrow, Steve, if you want. Ask me again in the daily brief. We'll take another whack at it. I only got about 5-10 minutes left here. So we'll have to leave the rest of these. I wasn't actually expecting you people to be asking any questions today. So interesting how you guys popped in here. But try and finish off these as fast as I can here. Number 2 is David says, good evening, Brian. Can you explain this, please? Early warnings in the TRI chap kept traders out of trouble. That was actually, I think, a tweet that Josh put out. Where is that? Boosh. So the image of the tweet is right here. I had a M top that came in here. I don't know whether you can see that. It's pretty tough to see that on that chart. But it actually ended up looking like, for me, was one of these. There. So that was the pattern. And I put out lots of tweets where I just simply said, we break and close above 21,892, we're a bull. Probably go up to, Collins pump chaser zone, probably even rally all the way up to reload short zones. If we failed through 21,319, I mean, hell, it just changes to a line chart. What letter of the alphabet do you see there? Up, down, up, boom. And then anybody taking the education program, you'll know that this is my favorite trading setup, the bot, where I just simply drew A, B, C, D. So if this 25 level gets tripped up, and in this particular case, this would have been front running that level because it was just operating off a market structure. The short trade itself is to go short at 21,318. Say a buck or so lower, risk against the 21,892, and your target is 100%. And because you're front running the trade, and I'm just eyeballing this, but you can see it comes out to 3.22% or 3.22 to 1 risk reward. And you can see the setup, it rallied up, it took out this high, and this is why we like to call this high in particular the noob stop, because this is what they do. And at one point in the day, like Josh's tweet was showing, was that ironically enough, I bet a lot of people in the marketplace, when they saw this move up here, keep in mind, that was a big green honking candle. They were probably like, Brian, your M's suck horsecocks. I'm going long, man. Look at that big green dildo. We're all going to get rich. And I got lots of Vaseline, so it's sliding in and out nice and easily. There's a horrible comment. So I put in the lounge. This is not broken out. This still is a bear pattern that has not been broken. That high did not take that high out. And sure enough, as soon as Mr. Powell opened his mouth, the market, the floor. This is the definition. If somebody wants to take a screenshot of this, and maybe this is a good follow-up, Josh or Chris, this is the definition of the floor falling out of the bottom of the market. That's the definition of it right there. That is, hey, I'm a bull, I'm a bull, I'm a bull. And then, wow, holy collapse. So, Julian, I think he's getting pretty good at his craft. He's going, looks like we nuke from here. I don't see how any of that can be taken as positive. He was talking about what Powell said. And I mean, Powell, Jesus, just play the video back. He was like, fuck you, fuck you, fuck you, fuck you. Rates going up. Fuck you, fuck you. I'm going to come and fuck your wife. Fuck you, fuck you, fuck you. Joey Diamond, he's going to be up after me. Fuck you, fuck you, fuck you. Here comes some more pain. That's basically what he said. And so Julian, I think, actually interpreted that correctly. And what did the market do? Look at what happened afterward. Was that good advice? I think so. Although we don't give financial advice, consult your financial advisor. The interesting thing about this setup now, ironically enough, is we've had move stop to trailing level hit. And interesting, look what letter of the alphabet is forming here. So I wouldn't actually have a problem if you shorted that bot right from there. And you're like, Brian, if I get any signs of W's because move stop to trailing level has been hit, I'm just going to walk away. And I've got my stop sitting right above here right now. I wouldn't have a problem with that whatsoever. So I hope that explains that. Okay, that is 12:30. And I appreciate that you guys have a few more questions that you posted in here through the broadcast. So I think what we'll probably do is we'll finish off these questions through the daily brief tomorrow. So I appreciate that that you guys have a few more questions for me. Unfortunately, Brian, I'm just such a blabbermouth. I hope you guys got some value out of that. It's incredible how quickly 2 hours just disappears, eh? Yeah, absolutely incredible. So, you know, Benner cycle. We're still going through ironically enough, this price action here, I actually think that all we're doing is we're just testing the bottom end of the range right now. It's interesting how you can see this was sort of the path that I said back here, right? When I did this, I said, you are here now. So I expected, hopefully you can see off of this, I expected us to counter trend rally and then come back down and actually break through these lows. This was done back in right off of these lows. That's when I did this image. So you can make the argument that that's what this move was up. And they, the expression they like to use is we take the stairs up, stair stepping its way up. What's incredible about this image is that I threw on the sine wave, and you can see how the market is moving almost perfectly in step with this sine wave. So when I saw this sine wave peak right here after seeing the trough and that little counter trend rally window there, I was like, uh-oh, this has got trouble written all over it. So ironically enough, actually, we're doing exactly what I would have thought we should have done through here. And I think all we're doing is we're just testing the bottom end of the range. It's not really rocket science. And that's this is probably the best way to finish this video off is, what should the next, few months look like? Where the hell is that chart? I have yeah, it is this one. Oh, darn. How am I going to do this? All right, so there's our fun sort of hacking of the 15, 14, 15 there. But I actually think that the market's going to do almost exactly the same thing here. So stretch that out. So notice that, when we come off, we test these low ends of the range, then we consolidate, we test the low end of the range, then we consolidate. And actually, I really like this scenario. So we rallied off of the lows. Remember, I showed you that sort of cycle move. Big rally, everybody's all rah bull, and then boom, all they do is they just bring the market right back down against its previous lows. And I think that's exactly what's going on here. This move here in particular from this low and then testing this low again, it was about 13 bars. And if I do the 13 bars, what that really means is basically the week that we're heading over to Portugal for our meetup, we should expect the market to be testing these lows. Yeah, wonderful. As I put tweets and stuff out, I really don't think, if you are a Bitcoin bull, awesome. I mean, it's fascinating to hear about the merger. I watched a really interesting video where a guy said the merger on Ethereum is nothing more than the banksters taking over the Ethereum blockchain. So in a weird sort of way, what I'm hearing, and it's always been the case, I can never figure out how the hell you put a value on a POS coin. Never could figure that out. And what I hear is that they're just going to more issuance. I get the impression now we're probably going to go through a period where the Ethereum story dominates and actually Bitcoin kind of quietly is just sitting in the background doing its thing. And then, we ultimately bottom. Nobody's interested in this stuff anymore through 2015. They're all, it's sort of 2015 similar scenario. I wouldn't be surprised if Bitcoin, this is a scary image, folks. You can see in 1415, we had to come basically right back down to the Silk Road reversal breakout. So you can see where the 2019, 2020, COVID reversal breakout. I don't see any reason why we can't come back down into here in some horrific candle into like the beginning of 2015. Makes perfect sense to me. So that's our scenario going forward. And this is sort of like why I was like, Oh, what the hell am I going to talk to you guys about today? And, unless you are that professional futures trader, like I showed you what the day traders do, the way they identify levels. And then once you identified a level, then you drill down to your super lower time frame charts and you're hunting setups like an absolute shark. And you don't have any process goal issues that you have to deal with. You're not making mistakes, you're sharp, and if you have to get stopped out, fine, so be it, you get stopped out. If you cannot play that game, then I would leave day trading alone for like the next probably 6-8 months. And then the irony of it all is that once we get through this window, then we're back into fucking up only market and you guys can make all the money you want. But first, right, we got to get through this shit. So, the funny thing is I drew this chart up a year or so ago. Nothing has really changed here. It's just, we got to get through this window. You can see how long the typical correction windows last. You can see what happens once we get beyond, and that's based just purely off of history. So it's almost identical, really. And I'll tell you, the time you got to accumulate ahead of this event. But once we actually get to the next happening event, then it's Lambo talk time again. So, if you're a Bitcoin enthusiast, if you're a crypto enthusiast, ironically enough, especially from an investment perspective, and now's a good time to go out, maybe learn how to do all this stuff. Take Brian's course, and it's a 1-year program. And I guarantee you, just ask anybody. In fact, anybody who's watching this video, do me a favor. In the comments below, hit the like button, subscribe, all that kind of fun stuff. Bless the YouTube algorithm, all that kind of talk. But if you have taken the program, in the comments below, just tell people that are watching this for the first time. After you've taken that 1-year program, do you look at the market the same way? Do you fancy yourself a professional? I had one guy today tell me, well, Brian, I was a barista before I knew you. A damn good one. And I'll ask him to make me a cup of coffee when we're in Portugal. But I don't think he's thinking about being a barista anymore. So, do me a favor. If you guys like the broadcast and you want to see more of this, and you're curious and you'd like to participate in the Bitcoin, get yourself educated. Get your plan, Paul. Yeah, but Paul, we were teasing you. You need WD GAN, man. But at the bare minimum, yes, you need that level 1 program. And then also what I would suggest, this hyperinflation world, I would strongly suggest you all go and buy the full 3 program package set, which is a total steal as far as I'm concerned. But my marketing department wants to do this. Go and buy the whole damn package set now. So then that way you don't have to worry about the stupid inflation price increases down the road. You're grandfathered on the site forever, and you don't have to worry about site memberships expiring, right, Paul? Anyway, okay, so what I'd really like is for you all to just close your eyes for a moment and wish Liam happy karma. Gonna go try and give him the best afternoon I possibly can. Would love for you to all participate on the site. Like I said, we have a raffle coming up for the fall program. So if you can take advantage of the raffle, would love to have you in the program, no doubt about it. I want to try and do what Jojo wanted, try and make a positive difference in this world. Where is it? I guess over here. But what I'm going to ask you to do is I'm going to ask you to sign up for the wait list. That's the way we'll do this raffle. And you can come on the site, sign up for a 30-day trial. You don't even have to join. And then put your name on this. This banner is right up at the top. And we'll do the raffle for the fall term there when we're in Portugal, either the 1st or 2nd week of September. And then, of course, the program starts in earnest the week of the 19th. We don't really have any choice. We have to start the program up here simply because we don't want it to go past Christmas. So, and we're going to make you work. There's no doubt about it. So, okay, only 10 minutes over today. That's not so bad. I will bid you all a fond adieu. I sure hope you guys enjoyed the broadcast. Hit the like button, subscribe, ring Clean's bell, sign up for the 30-day trial, therationalinvestor.com, and then join the wait list. And FYI, if you do want to be in the raffle and you do want to participate, you have to be on the call for that broiler chicken show that we're going to do from Portugal on the 18th. So if you want to be in the raffle, you got to be on the broiler chicken show. Because like I said, last term, we had some guy who joined. I don't even know if he was even still here. He wasn't on the call and we could never find him. And it sucks because I really want to give that free seat away and have you guys go, man, that was so awesome. So, okay, let's leave it at that. Chris, did I do a half decent job here today? Good job. Excellent. So keep the speed under 100 kilometers an hour. Geez, that's pretty tough on Highway 1, but I'll try. PMA for the win. We didn't even talk about the breadth indicator here today, but wow, this thing is incredible. It's so perfect. So maybe join 30-day trial and come on the daily brief tomorrow. And we'll talk lots about breadth indicators and signals that our engine is actually telling us to think about. So, all right. Have yourselves a great day. PMA for the win. All the best. And bye for now. Where are you? You're over there. Bye.